What's up, everybody? Welcome back to Earn It, Save It, Invest It. The stock market is starting to look like it might have some cracks in it, right? It's starting to correct itself. We have some major stocks going down. The indexes have gone down. So I'm going to go over this really quickly. Right now it's November 6th. It's a Thursday, so I'm just going to go over it really quick and kind of tell you what's happening in the market, which stocks have really gone down. One of my positions went down 25% today. Other stocks have gone down. A couple went up, but mainly the market's down. And so I'm going to go over which ones went down, how you can capitalize on that, and what to look forward to in the market that, in the next month or two to finish off the year, what you can expect for the stock market, right? So go ahead and please give me a like and subscribe. I really appreciate it if you like this content. So just let me hop right into it. This is my $100,000, not $100,000, it's my road to $100,000, right? I have a $100,000 challenge where I'm trying to take $7,354 and make it into $100,000. So right now I'm currently at $8,759. I lost $642 today, which was a 7.5% drop. That was brutal. It's brutal to feel, right? But I'm not scared at all. That's the number one thing when it comes to stock market. When things like this happen, do not feel super scared or anything unless you have a bunch of stocks that are very speculative and you're not sure what's going to happen. But if you have some good, decent stocks, you should be fine. In fact, you should always have the mentality as it, like when you are looking at a stock market correction or crash, you want to look at it as if you're walking into the grocery store and they said, hey, everything's on sale. Would you go and then want to return? Like, are you going to go and sell your, like, what are you going to do with the stuff in your fridge, right? You shouldn't go back and deal with that. What you need to do is go in there and buy all the stuff that's on sale. Right? All the high quality stuff that you know is on a good discount that's way valuable later, buy those. So that's what I'm going to be doing as the stock market starts to correct itself. So as you can see, this is by weight, my biggest positions. HIMS, I said it. It was going to go down in October, and I said possibly even November too, but we'll see. It's been known to have a double-digit up or down month every single month. So I think if it goes down this month, it's going to have a tremendous December. But HIMS has gone down, went down 5%. TQQQ went down 5%. Nike didn't go down much. It's down 5% for the week. Celsius hurt so much. Celsius is down 25%, and it doesn't even, kind of makes sense, but it actually doesn't make any sense because they're going to have basically a transition period where it's going to be a little rough, right? Going from they bought the Alani Nu to they're going to transfer all the SKUs and transfer all the delivery, right? All the distribution from Pepsi, and they're doing all this. They bought Rockstar, so they're going through the fourth quarter is going to be like a transition period, and there might be a few speed bumps. But to lose 25% of your company's value, and all you're telling people is that we're going to take one step back to take 3 steps forward. We're going to take one step back to take 5 steps forward, actually. Like, they're making big moves to really help the company, but people freak out. And that's why you just can't be emotional with things. But if you want to get Celsius on a discount, now's the time because it's at 45. And my cost for this account, I have other accounts too with Celsius, but this one's at 36. Right? I'm down just today. I lost 25. I was... I don't even know exactly how much I lost. Well, I have 22 shares. It was down 25%, about $15. So yeah, I lost, about 300 something in that just from Celsius. So, but that's fine. I believe in the company, so it's all going to come back. Fubo went down 7%. Meta went down. Meta went down real hard, about 11, 12% earlier this week. That's why it's at negative 15. So Meta was already hit pretty hard. Amazon had a really good boost earlier in this week. The same day Meta went down, but it also got hit by almost 3%. Hesai and Adobe both down just over 2%. So every single stock I have in this portfolio is down at least 2% except for Nike, right? All of them are down. and it's not a good day. So what I want to go over as well. Oh, I wasn't even showing you. Oh man, sorry about that. That's the last. All of these, right? These went down. Fubo's down 7%. Meta down 2%. Amazon right there. So I was looking at all of those right there. But what I do want to look at is the VIX. The VIX is creeping up. Right, when the VIX hits 25, it's typically an okay time to buy. When the VIX hits 30, it's a pretty good time to buy. And if the VIX hits 40 and above, it's just, you should buy. You should buy the indexes or buy really high quality stocks that have gone down, because typically when it hits these points, like I said, this is like a okay time. This is a good time to buy. This is a time you should definitely buy. So right now at the VIX, we're only at a 19, right? We're not hitting 20 yet, so we're not really there. But if we start seeing this VIX push up and up and up, we might want to start questioning how far is this actually going to go, right? This is the heat map. This is of all the stocks that, they went up or down. If it's red, they went down. If it's green, it's up. And obviously we see a lot of red in some of the biggest companies, right? The size is based on how big the market cap is of all the companies. And as you can see right here, some of the biggest companies all in the red, right? Even, you have Visa, which is kind of like a safe, and MasterCard. I mean, these are, Bank of America. That's the only green one. I mean, actually, these are green too. Sorry, these are green. These are all green right here. All banks, basically, kind of the safe haven, right? Then you go over here into technology, and then this is where you kind of see it as more riskier, and it's all red, right? A lot of red over here. Tech, and this is electronic tech. I mean, it's kind of the same thing, but, a lot of red. So that's interesting. Well, another thing I've noticed, this is the United States, this is the economy, right? This is the consumer confidence. Now, one thing when you look at this number, right? When you see it, you can see where we're at. It's a trend. Now, when you see the number 53, it's just kind of it's just a random number. I don't know exactly what that number completely represents, but what I want to show you is this does represent the confidence of the consumer. And when you can see the confidence is going up. Now, when you look at these years, we're talking, this is 2012, 2013, 2014, all the way up. This is 2020. This is COVID. Ever since COVID, we have continued to go down in consumer confidence. And the number one reason I think of that is because everything has gone up in price, right? Houses, food, health insurance, auto insurance, every single thing that you can think of has gone up tremendously, except for your pay. So the consumer confidence has been shot, right? Now, I'm going to show you how far back it goes. We're talking, okay, it got shot back into the 2022 when we had the, a lot of inflation and just a lot of stuff happening with the economy that was not, the interest rates were going up. The economy was not in the best of places. But besides 2022, when was the last time we were at these levels? And you have to go back all the way to 1980. 1980 was the last time the consumers felt this crappy about buying stuff and, about the things that we have. And, over here in the 2000s, obviously with, Y2K or whatever, right? And maybe this had, that's not even the war. That's not even 9/11 right here. This is obviously a tech bubble. That's what happened. So the tech bubble happened, and obviously that crashed people's accounts and everything, right? People who were invested in all their 401ks and pension, all that stuff got obliterated. So the consumer confidence went down. And then, of course, this was a great financial crisis, and that killed it. Even at the worst of the great financial crisis, the dot-com, all of this, COVID, we have not been this depressed about the state as a consumer, right? This is right here. Let me see here. It says the index of consumer expectation focuses on three areas: how consumers view prospects for their own financial situation, how they view prospects for the general economy over the near term, and their view of prospects for the economy over the long term. Each monthly survey contains approximately 50 core questions. So essentially, they're asking all these people questions, and they're doing all that. And this is how people are feeling about their own position, right, as a consumer in this world, in this country. So not doing too well. Unemployment rate creeping up. We haven't been at this rate since 2017. And obviously, I'm not counting COVID. COVID was just ridiculous. And then that whole, everyone getting hired back through all that, this is like, no, this doesn't count. This is a blip. But we are now creeping up. And I'm sure you know, if you're trying to take a flight anywhere or do anything, the government shut down right now. So there's a lot of people who are not working. There's all kinds of layoffs happening right now in certain businesses, right? So is the unemployment rate going to keep going up and up? And if that's going to keep happening, it's good for interest rates because the Fed will lower interest rates probably. But does that mean our economy is not going to be doing well? How do we get the consumers feeling good again, right? How do we get? I don't feel well. It's me, my 2 kids, and everything, right? The mom, all of us. So it's like there's 4 of us, and it's hard to get by on a lot of things. And I can't imagine people in worse positions, right? We're okay. I mean, we do live in Los Angeles. It's a very expensive city, but I don't know. So right now the market's kind of crashing. It's kind of correcting, and I called it. I said this was going to happen 2 months ago. So I was off on my timing, but I knew this had to happen at some point. And I think what's going to happen is people or the market, they're going to say, well, what's next, right? We got our earnings, which were good, but clearly didn't wow the market. So now we have to go another 3 months with what? Tariffs? We're going into the holiday season with people not feeling good about the money situation. People are not spending as much money. So what's a catalyst to make the market go up? I don't see anything. I don't see anything happening unless the Fed continues to lower rates and then somehow Trump and the administration and everyone comes together to make things better in all kinds of ways. I just don't see it happening too quick. So I also don't see the market going into a bear market. So I do see a correction happening that can last with about a month or two, and then from there kind of go up. We'll have a catalyst. I think maybe over the next 3 months, over the next 2 months, the rest of this year, we kind of have a rough market, and then we start next year doing okay. I also think 2026 is going to be the year of show me the money. I definitely think 2026 is going to be, okay, you've invested X amount of billions and billions of dollars in AI. Show me the money. Which companies are going to show you the money? Because the last couple of years, it's all been about infrastructure, getting things in place, NVIDIA, right? Getting all the chips, getting all the power together. Okay, now what are we doing with it, right? How are you going to make, it's like the internet, right? When the dot-com bubble happened, where this technology happened and everyone was doing it, all this and that, but who was really making money? You got to show me the money, right? And even at that time, Amazon. Let's just look at Amazon stock really quick, right? Amazon. Right, so look. It went up, and then it dropped with everyone else. Right? You could have bought stock for Amazon in 2001 and said, I was just messing around in middle school. Stupid. But you could have bought Amazon at 30 cents. 30 cents. 30 cents. That's crazy. You could have bought it at 30 cents, right? So this whole was like, show me the money. Okay, who's really going to show the money? Well, you know who showed the money? Amazon showed the money. Right? And over time, it showed everybody the money, right? I mean, you look at it going from this point, this was its lowest point. It never, ever looked back after the storm calmed down, show me the money. So I think that down stretch where we had, and let me put it back up on the screen, this stretch right here, this could actually be 2026, 2027. To be honest. Now, also though, one thing I want to keep in mind is that we're dealing with a better technology than the internet. Back then, things moved slower. So when the dot-com happened, how long it took to recover and do all this, everything, the crash could be quicker and the recovery could be quicker with AI, right? All of a sudden we're going to be able to see who's the winner and who's the losers a lot faster, because AI is supposed to be more efficient in the sense of getting things done, right? So we should be able to see results faster. So maybe it happens, sooner, and maybe it happens quicker. And it's just a quick drop down, and then we just continue to go up because we're okay, these are the winners, these are the people doing it, and these are the losers, and we're dropping them. So I don't know, it's interesting to see where we're at right now, because we have all this AI talk, and then you see a bunch of videos, and it's like, I mean, granted, the graphics about it and the clarity and stuff like that is really good, but there's so many things that have to happen still in AI. And so who are the real AI winners, right? Is it going to be in video? Is it going to be in data? Is it going to be, I would say in data and technology, but where is it really going to be? In cars, right? So there's so many different places that AI has to be, but we're implementing it, we're building it right now. And at some point, investors are going to get frustrated, okay, you're spending, we need to see the money. So if we don't start seeing companies really, really expressing AI is making this much money for our company, I think that's going to be the big wall right now for the market to want to really go on a huge another bull run, because eventually we're going to say we need to see the money. So that's my quick video. That was quicker than usual, right? 17 minutes, under 20. So yeah, the market's kind of crashing right now. It's correcting itself, right? Don't call it a crash until it's at least 20+%, but it's definitely correcting. So I'm okay with that, right? Let's look at the indexes really quick. All right, so we have everything kind of going down, right? We have the Dow Jones went down 0.8. NASDAQ went down almost 2%. And look at this. Oh, let's 5 here. When you look at this, we're still way up here, right? If we're actually going to correct in a serious major way, we still have a ways to go. We still have at least a ways to go. This was a 17%, right? Let's just say we want to correct 10% from where we started at. We got another almost 7% to go. That was nothing what we just felt. And it could be the beginning of something major, right? That's a pretty big red candle. That is a red candle right there. That one was good too. This one was good too. If we get another red candle after this, if we go red tomorrow, be prepared. Be prepared for something to happen to finish off the year. That's all I'm going to say, right? Just be ready. Be prepared. Don't be scared though. I have my deposits going in $50 every week, and I'm not going to buy this week. I'm going to actually just let it go into the cash pile and then just see what happens. I'm going to see what happens. In my other accounts, I lost a lot. I have Celsius and I have more Celsius. It went down 25%. Man, that thing, it might have been one of my biggest loss in a day, from just in a portfolio perspective, because that one was such a big loss. So it was also a big gainer. It's still a big gainer, right? So technically it's not a loss on the portfolio, but numbers wise, right, the value of the portfolio did. So anyway, thank you for watching. Like I said, please give a like and subscribe. I really appreciate it. Oh, it didn't pop up. There it is. Like and subscribe. And yeah, always be prepared. Don't be scared. Don't be emotional, because we're going to correct at some point, and just be ready. And never forget to Earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.